Hello and welcome. You're watching NDTV Profit and you're watching Profit Insights. I'm your host, Vishwanath Nair. Today on the show, we'll be discussing ICICI Securities and the delisting of that company from the share market. To discuss this important development, we are joined by Mr. Ajit Dayal, the founder of Quantum Advisors, as well as Shriram Subramanian, the ND and CEO and founder of InGovern. I want to first start with setting the context on what the story is. Essentially, what happened with ICICI Securities is that there was a proposal to shareholders to delist and then merge that company with its parent ICICI Bank, and so that ICICI Securities becomes a wholly owned subsidiary of the bank. Now, a swap ratio was proposed to ICICI Securities shareholders where for every 100 shares in ICICI Securities, the shareholders would get 67 shares of ICICI Bank. While this had been announced at some point last year in June, the voting that happened over the last week between the 22nd of March and the 26th of March, that showed a lot of interest by ICICI Bank to canvass shareholders, to chase them through phone calls, through personal visits, asking them, aggressively chasing them to vote in favor of the proposal to delist ICICI Securities. Of course, a lot of other investors in the market have been repeatedly saying that they do not think that the swap ratio was fair. One of such investors, of course, is Quantum Mutual Fund. I want to start with you, Mr. Dayal. The question I have, is with regard to the valuation of the company itself. Now, one argument is that the company has always been undervalued. So what is so special about the swap ratio? Why should the swap ratio be priced better? I want to get your views on that.
Sure. It's going to be a bit of longer view, so have patience.
That's fine.
So at the time when ICICI listed its subsidiary ISEC, I don't think the valuation was low. They gave it at a very high IPO price. And they had investment bankers involved at that time, and they can justify that. But the fact is, it was at a high IPO price. There was a 17% collapse in the price at the time of listing when it began trading. And yes, the business of ICICI Securities was certainly under threat with all the VC, PE funded sort of Robinhood equivalents in India, which were offering broking services and wealth advisories for pittance. You must recognize that a lot has changed in the funding atmosphere, and those same companies that were spending thousands of rupees to acquire customers on the broking business and did not make any money are now more disciplined. And whenever there is discipline, whether it's cement, steel, or stockbroking fees, there is a higher price that the consumer starts paying. So if you look at the numbers coming out of ISEC, it actually is in a great position to start making a lot of money. And we, as a long-term value investor at Quantum Advisors, a sponsor level, and Quantum Mutual Fund at the AMC level, we have been acquiring these shares in the market with an assumption that the business will grow very well and there will be an uptick on the share price. We are not against a takeover, if you will, of ISEC back to the fold of ICICI Bank. If you give it a good valuation, yes, it probably makes sense for ICICI Bank to have a captive entity like it was before the listing, where they can have sort of customers move on to the broking platform. So we're not against the fact that the parent is taking control again in 100% ownership of a company that it got rid of. What we are challenging and have been fighting about and talking about is what was the valuation metrics and what is the role in the whole ecosystem. So everyone's talking about India now being the third largest, fourth largest market cap GDP in the world, and India is a superpower. Well, we're a sham in terms of corporate governance, as is being displayed by what's happening between ICICI Bank and ISEC. And I'll explain this. As an ISEC independent board member, shouldn't I have got a valuation report done? And as an ISEC independent board member, should I just not look at common data available of what the peer group of ISEC is valued at in the stock market, right? Whether it's NSE or BSE, these are listed companies, Angel Broking, 361, et cetera, et cetera. So there is a benchmark available in the public domain to understand what's proposed by a 75% boss sitting over my head, ICICI Bank, who probably has vetted and approved my role as an independent board member on ISEC. So one is, am I really independent? Is my mandate to favor ICICI Bank shareholders, or is my mandate as an independent board member to look after my shareholders in ISEC? Then you come to the valuation exercise firms, the large firms that have come up with a valuation report. Don't they look at market data? I've not personally seen the entire valuation report, but I can assume you can make cases one way or the other. But there's market data about valuation of peers. Then you come to the proxy firms who are advising individual unit holders, shareholders, and institutional shareholders on what to do. Now, I've dealt with proxy firms on a global basis. I used to manage a $2 billion Vanguard International Value Fund for 4 years when I was living in America. And proxy firms, 7 out of 10 of the recommendations were fine, and 3 out of 10 I used to protest. And every time I protested as a fund manager, I had one thing in mind: what is good for my unit owners? And if it is not good, I'm happy to take on the proxy firms, and I would have to write in a note why I should vote against what the proxy firms have recommended, because I disagreed with their assumptions and their recommendation. I had to give that to my internal compliance so I could justify and cast a vote against them, which means as a fund manager, and I'm now coming to another set, as a fund manager, I am responsible to my unit owners. Now, let me take the example of a fund house, which has a small cap fund, which owns ISEC, and it has a large cap fund, which owns ICICI Bank. Now, we know in this ratio, and I wrote an article on this, calling it a heist of
Right.
1,800 crores.
Right. Mr. Dayal, I'll just come to that.
Let me
Mr.
finish
Dayal,
this. We
yeah.
know that ICICI Bank is going to profit by 1,800 crores. As a fund house, I would expect the owner of ICICI Bank to vote for it. I'm getting a gift. And I would expect the ISEC fund unit owner, the fund manager, to vote against it. Now, these are analysts. They can also see market data. They look at market data on a daily basis. They're not questioning this advice from the proxy, and they're not challenging it. Why? Are they really deemed fit then to look after patient capital and the savings of millions of unit owners? So I'm questioning the whole ecosystem here. Right? And then on top of that, to top it all, apparently ICICI Bank relationship managers are calling unit shareholders of ISEC and are saying, listen, show me a screenshot of what you voted. I mean, this is like a mafia operation, in my view. And I make no bones about using that phrase, a mafia operation.
All right, Mr.
So I have a lot of questions on this.
I would like to come to those topics as part of this discussion going ahead. But first, you mentioned proxy advisor, and we have a proxy advisor who actually did recommend a positive vote on the proposal to delist ICICI Securities. Yes. Mr. Shriram Subramanian from InGovern. Mr. Subramanian, I want to get your view. What exactly is the bone of contention here? As Mr. Dayal has pointed out, the market is clearly undervaluing ICICI Securities, and so is the promoter of the company. Both of them are heavily undervaluing because just the nearest competitor, Angel One, is valued at about an 80% premium to ICICI Securities. So just trying to get a sense as to what was the rationale behind your recommendation to vote in favor of the proposal, and what might be going on in the minds of the other investors who are probably opposing this.
Yeah, it's firstly look at it from a point in time kind of perspective. Angel One today is a different animal to what it was a year ago, right? I mean, the markets are different in what it was a year ago. June 28th, 2023 was when the announcement of this swap was made. Okay, it is only procedurally taken them so long to get to this point. The market and the environment has changed since June 28th. So the valuation, if at all, has to be taken at that point of time. And even then, the valuers who are valued have used market comparables, have used other matrices also to arrive at the valuation. Be that as it may be, even the shareholders of ICICI Securities, the likes of Quantum and the others, had at that point of time valued ICICI, the swap, we did numbers. If you crunch the numbers of the 6 months VWAP stock price, it was coming at a swap ratio of 0.54. That would have been the number of shares. 54 shares for every 100 shares of ISEC would have been the par for the course, okay, for a 6-month VWAP. Prior to June 28th. At that point of time, nobody in the market knew as to what would be the that ICICI would buy out ISEC. But ICICI chose to pay a premium, and subsequently now even institution and ICICI doesn't get a share to vote on this at all, right? Only the minority shareholders get to vote on this. So that's again a procedural thing. But as you said, the rationale for us recommending is one, the fact is that ISEC was undervalued even by market, and ICICI was giving a premium, 67 shares in lieu of what it would have been par was 54. So it was a substantial 25-28% premium. Two is even after that, if you see in the last 6 or 7, 8 months, the swap ratio has been around 69-70%. It is not that shareholders think that this proposal will be defeated. In fact, they have institutional investors themselves have voted for the proposal, right?
I want to bring up this question of institutional versus retail. First, Mr. Dayal, and then Mr. Subramanian. But if you look at the way the votes are tally at the end of this entire process, 84% of the institutional shareholders who voted have voted in favor. Similarly, from the retail side, 68% of those who voted have voted against the proposal, have voted opposing such a delisting. So there is this clear, massive divide between how institutional shareholders are viewing the swap ratio as well as the delisting versus what the retail shareholders are seeing as probably an undervaluing exercise. Mr. Dayal, I wanted to get a sense from you. Now, you said that you question the way that this ecosystem is working, but difficult to say that every single institutional investor is probably missing the woods for the forests, right, or for the trees. I don't know how to say that.
No, it's
say
very
that phrase,
easy.
but yes,
You must understand. It's very easy. You must understand the DNA of the mutual fund industry and of institutional investors. It's all about cover your ass. It's not about looking after the interest of your unit owners. There are very, very few fund houses in the world, and I can say with great confidence, Quantum stands as the only AMC in India which really focuses on what's best for investors. We have a history of that. You should do an episode on us one day. But I'll go back to what we just said about the ratio. Please recognize that the share price of ICICI Bank and ISEC have both grown up, have both increased by 15 to 17% over the last 6 months. So both were undervalued, both are at the same valuation today. The swap ratio is not determined by then. But the swap ratio has to look at the peer analysis, has to look at what is likely to happen in the company. And the reason why you have institutional investors listening to proxy firms is because, like I said, they just want to sign off. You know, InGovern said this, so I'm going to do it. There's no thought process. There's no thinking. There's no application of mind. It shows the complete nakedness, if you will, of the investment management industry in many ways. And it also questions, I question the rationale that I just heard about the proxy firm valuation. And I know that. I've experienced this on a global basis. I've challenged their decisions and voted against it. I'm not saying that because I vote, we're going to win. I have to have a conscience, and we as a firm have to have a conscience that we vote on what we think is the right thing from our perspective of unit owners in our funds. I want to just talk about what you just said about the individuals voting against it. Imagine the percentage of votes of the individuals who have voted against this if A, they were educated and informed, and B, if they were not coerced into voting, possibly by a whole bunch of ICICI Bank phone calling tele agents, the same people who missell you home loans, who have missold you car loans, are now misselling you on why, potentially, on why you should have voted for the merger, right? So it goes back to the whole ecosystem sort of not being fair to the, and I really hope SEBI takes cognizance of this. And I hope RBI takes cognizance of this. I don't think ICICI Bank has a license to tell people how to vote.
Sure, Mr.
I mean,
Dayal.
that license belongs to the proxy firms.
And something has to be said about a proposal that is so heavily disliked by the retail shareholder, even though their numbers are low and therefore their vote doesn't change the outcome. But something has to be said about that, isn't it?
No, this is the case in most proposals because one, the heft of the number of shares held by the retail investors tends to be small. Two is the participation by retail investors in voting processes tends to be lower. Three is the way they vote is obviously not in a concerted manner. Different retail investors could think differently. So from that perspective, at least in this case, they have who seem to have at least majoritarily voted against. But I mean, we live in a democracy. Even our general elections are coming up. So from that perspective, whoever holds a larger number of shares prevails. And that's how the institutional investors seem to have voted here overwhelmingly in favor. And be that as may, this is not a simple majority, right? It required a 67% vote in favor of the number of shareholders voting for. So that's the reason it was not a simple ordinary resolution. It was a 67% shares percentage had to vote for, and that's how it prevailed.
One of the posts on social media that I read was reading earlier before the show suggested that maybe there's a need to bring in a 2/3 majority at individual shareholder class level, right? But in shareholder class rather than the entire shareholder base. Maybe each individual class of shareholders need to approve it with a 2/3 majority. Would that work at all?
No, but no, that wouldn't work because you cannot take one instance and then apply it across all the other instances, right? Then so many other instances in the past would have failed. So you cannot have an exception to every rule. You cannot, policy making doesn't work that way. So if there is definitely, can it be 75%, which is the supermajority? Probably, because this is the first time that such a delisting proposal has come up, where a holding company can delist by doing a swap and etc. So those are policy level decisions that should be discussed at a broader level.
Right. Right. Thank you, Mr. Subramanian. I want to take one last question with both you gentlemen. Quick responses. Mr. Dayal, I wanted to get a sense from you the way that ICICI Bank has gone about it. Now, they're saying that they're doing it to encourage investors, to inform investors. And this is what the clarification earlier today said, that this is why we reached out to the customers. There is a huge overlap between ICICI Securities shareholders and ICICI Bank customers. And therefore, it was easier for us to reach out through the bank. Your view? 30 seconds, sir.
So I think, I think firstly, the vote did not sail through. It squeaked through. And I think that there's a lot of introspection that SEBI has to do. SEBI gave an exemption to this merger to the reverse book building project or process, if you will, and to allow it to happen the way it did. That obviously has played to the favor of ICICI Bank. SEBI has to also recognize who are they trying to regulate? Who are they trying to protect? Which market are they trying to develop? Are they trying to develop the institutional market? Or are they trying to develop the individual coming into this market? Prime Minister Modi's one emphatic win has been since he became Prime Minister in 2014, the number of mutual fund investors in this country has zoomed. It will be sad that one of the significant wins is reversed. And reverse it can be. Please recognize what happened after Lehman. I don't know where you were in 2008, but there were 4 years of outflows from mutual funds after the scams during the Lehman crisis in India. And we have to also again recognize that the individual shareholders through ICICI Bank's alleged telecalling and telesales marketing efforts may have been misguided. At the very, very least, SEBI should call for a new vote and put more information out there so that investors can vote properly without being pressured by ICICI Bank. Right. A new vote is at the very, very minimum. Forget all the inquiries into the independence of the independent board members at ICICI, into what the proxy firms have done. At the very least, start afresh, and give individual investors and institutional investors a chance to vote again. And that, to me, will solve the problem. Then we will see what proposal sails through.
Sure, Mr.
Then
Dayal.
we'd like to
Sure,
see
Mr. Dayal. Okay. Mr. Subramanian, one last word, 10 seconds. I just wanted to get from you a little out of flavor the way that ICICI Bank has conducted itself in the canvassing part.
No, there has historically been, I would think, a third-party agency which is used for delisting and shareholder outreach.
Yeah.
In this case, the bank seems to have done it in some cases. They have put out a clarification, and as you said, I'm not sure how many shareholders they reached out to, but that probably could have been avoided. Yeah.
Right, Mr. Subramanian. Unfortunately, we have run out of time now. Thank you so much, Mr. Dayal and Mr. Shriram.
One thought.
Mr. Shriram, I'm sorry. Mr. Dayal, I'm sorry.
This is the same group, same kind of people who would send goons to take your cars back.
Right, Mr. Dayal. We will discuss this. We will discuss this in detail, I promise you. But thank you so much for joining us on the show today. We are really out of time. Thank you so much for our viewers for watching Profit Insights. Do tune in to NDTV Profit.